So after the last two reviews where we looked at trading journals from traders who are new, maybe struggling a little bit and who need to improve the general way how they use Edgewonk when it comes to data input and data quality, now we're going to take a look at a journal where the trader is really doing well, and let's take a look at if we can find out what he's doing that works the best, and maybe we can find out a few things that could help the trader improve his trading performance. So when we look at the performance graph in the Home tab, you can see that he's doing very well. He's currently at a positive performance of around 12 to 15%. The equity graph looks healthy and going upwards. He has a win rate of 47%, which many traders would not consider high enough, but the trader is clearly showing that with the right reward to risk ratio, when you let your winning trades run and when you cut your losing trades, this is going to be positive in the end, even with a lower win rate. When we go to the journal, I always like to start by looking at the tilt meter, and you can see most of the time the tilt meter is filled out quite nicely. There are some trades where he hasn't assigned a tilt meter, which I think is always going to be helpful if you change that. So you want to go to your trade entry, exit, and trade management comments, and you really want to make sure that for every trade that you enter, you have assigned a value. I mentioned it in the last videos, the information that you get from entering your trade entry, exit, and trade management comments is going to be very, very helpful going forward. So it's a very quick way of improving your knowledge about your trading. It's a very quick way of just improving your data quality in Edgewonk in general. When we look here at the take profit and the stop loss price, you will see that for every trade, the trader filled out those columns. And this is different from the last trader where he often missed this. So in this example, the trader is on top of his entry game, and he seems to be doing very well when it comes to entering his trades overall. After 30 trades, you can see that the PCP and the PCR are also activated and now working, and this shows how well the trader is doing with his trade management. When you see that you have a green PCP, for example, it means that the reward to risk ratio is large enough and it may provide a positive expectancy. When you see that you have a red PCR, for example, it means that you may have mismanaged the trade. Often this may be the reason when you cut your winning trades too soon or when you let your losing trades run too long. Now let's take a look at the chart lab and see how well the trader is doing when we analyze the graphs. You want to start with the equity graph, and you can see the very nice positive performance that we have seen previously. There are also no big swings, so not a lot of volatility in this performance, which looks great. When we go to the holding time, it looks very healthy as well. There are just two instances where the trader has two trades with a negative holding time, which should not be the case. And this means that the entry and the exit date may have some issues. Very often the exit date then is set before the entry date, which causes the negative holding time. So this is something to look out for in your journal as well. When you see that the holding time is negative, it means that your exit date is probably set before the entry date. It's very easy to correct that. You just go to your journal, you look for those trades, and then you can correct that. When it comes to trade management, the trader is doing very well. You always want to make sure that your orange graph is above the green graph, which means that your actual and your current trading performance is above the theoretical set and forget approach, which would mean that you are mismanaging your trades. In this example, the trader is managing his trades very well. He's making a positive performance when it comes to trade management. When it comes to the chart book, the trader is very on top of his charting as well. You can see for every trade, it seems like he has entered at least one screenshot, which is good. Screenshots help you later on to analyze your trades even more in depth, especially when you come back to your chart book in maybe 2, 3, 4, 5, 6 months after you have entered your trades. You can very nicely follow your progress. Maybe you see charts now very differently, and you can track how your charting and your view on the markets has evolved over time. The chart book is a great way to help with that as well. Now let's dig into the trade analytics, which is often providing important information about where the trader might be doing not so good and what is working really, really well. So first we can select the trade outcome here. It moves to the top, and now we can analyze the trades by the outcome. We have break-even trades, we have winning trades, and losing trades. One thing that really stands out nicely is the expectancy here. The losing trades have a much lower expectancy than the winning trades, which means that he seems to be able to cut his losing trades early on very effectively, and he's able to let his winning trades run much longer. So this is a great ratio. It seems like this is a 2-to-1 ratio, so the winning trades have roughly twice the size of the losing trades. And as we've seen in the home tab, even with the win rate of 47%, here the trader is still able to perform with a positive return, even with such a seemingly lower win rate. The one thing that really stood out about the trader here, and something that he might be able to improve later on, is using the updraw and the drawdown. Especially here, it seems like for his winning trades, his updraw is 160%, which means that his winning trades could be even bigger. He might be able to let his winning trades run beyond the initial target to capture a larger take profit and a larger win. The updraw, for those that don't know, measures the price action with regards and in relationship to the take profit. So for example, if your updraw is 100%, it means that the price moved to your target. If the updraw, like in this case, is 160%, it means that the price went beyond your initial take profit, and you may have realized, or you could have realized, a larger winning trade by letting your trade run. So this is a great way for traders to analyze their take profit placement. And if you see that you have a very high updraw, you may be able to use a wider take profit approach. We can look at the different setups for this trader as well. And again, I want to order it by the sum just to look for outliers. And in this case, there are no big outliers here really. All of those numbers look very orderly. So the trader is very good when it comes to managing his risk. Let's go to the updraw and the drawdown again. And here you can see there are, when we sort it, there are some instances where the trader might be able to really let his winning trades run for a longer time. You can see here that there are instances of 500%, 260%, 184%, where the trader might be able to even realize a much larger winning trade, which is a great way of improving your trading performance and your expectancy overall. One thing that really stands out is he uses a custom statistic with risk. So when we go to the journal, he has set up a custom statistic. When you scroll a little bit to the right, here it is. And so he seems to be entering the risk for every trade, how much he takes per trade and how much he risks per trade. And he uses an interval setting where he analyzes different level of risk percentage. So when we go to the trade analytics and we use the risk, when we look at it, we want to order it. So here are the different risk levels below 0.5 all the way up to 1%. And it seems like that the higher the risk, especially here the extreme high, it seems like the trader is doing much worse. So here for 6 trades, he realized a loss of $108, which in comparison to his other trades seems to be quite large. Also, the negative expectancy is much higher on those trades where he is risking a lot. So maybe this trader has an issue with bigger positions, and this is also an important finding that may help the trader to improve his risk approach, stick to smaller levels where he is comfortable, where he's clearly able to perform positively. Very interesting finding and a good way to use the custom statistics. So for this trader, he's doing really well. The one thing that I would recommend is trying to look into the updraw and try to come up with different ways how you could manage your winning trades, maybe use a wider take profit or a different approach to take profit setting. And also I would recommend for the trader to look into his risk overall to make sure that he is optimizing the right level of risk for his trading and analyzing and making sure that if he should be really using the high risk level of some of his trades. Other than that, the trader is really on top of his journaling game. This is a great example of how Edgewonk could be used and how the Edgewonk trading journal may help you improve your trading and just recognize and record your progress. Also, I really would encourage the trader to fill out all of those entry, exit, and trade management comments going forward, because they may provide a lot of important insights into the trading performance. If you are an Edgewonk user, or if you think about becoming an Edgewonk user and you would like us to take a look at your journal, provide tips, and maybe find out ways how you may improve your trading with the information from your Edgewonk journal, make sure to check the link in the description below, and we are very happy to take a look at your journal.